Before we start, just a couple of background bits for myself. I am working from home with a 3-year-old running around, so in theory she won't interrupt, but just in case she does, apologies now. And secondly, I do suffer quite severely with hay fever, so if I have a coughing fit, I will mute myself temporarily, and I will also hide myself just while I have a little bit of a coughing fit, and then I'll come back. But it's not COVID-19 or corona, it's just purely allergies. But anyway, let's talk about why we're here today. So first things first, I'm going to talk about the updates to the coronavirus job retention scheme. I might abbreviate that throughout the presentation to CJRS because it's a bit of a mouthful, but they'll be intermingled, and I'll swap between the two quite frequently. Once I've told you about the updates, I'm planning on telling you the information needed to use the portal. This information was released the later part of last week, with more detail to our original webinar, and also there's a bit more information that hasn't been put on the guidance, but from using the portal this morning, I can give you a bit more information. I'm also then going to talk a little bit more about the portal. Then finally, we'll wrap it up with obviously how we can help as a firm, and finally answer all the questions that you've raised throughout this webinar. Now, I would like to draw your attention to the bottom of your screen. You should have a Q&A section, which is where you can enter all your questions. If you can avoid using the chat function in there, purely because they get lost amongst the conversations that are having between the panelists. So Q&A sections where they'll all be able to be collected, ready for Laura to kind of run through them and for me to answer them for you. So, it's quite in-depth what's changed in terms of the CJRS systems. The main thing that's changed is this new date that's floating around, the 19th of March. Now, the reason for that date is purely because on the 20th of March is when the Chancellor announced the CJRS scheme being available. Therefore, the 19th of March has become their new cut-off. On the 15th of April, which is when he announced this, the date change to the 19th of March came as like a massive relief to a lot of people, because we all thought that that meant people that were taken on, left their previous job on the 28th and started a new one on the 1st of March or the 2nd of March could suddenly be furloughed. Actually, it turns out that they've also, alongside releasing this supposed extension, that they are giving us a definition of on payroll. Previously, we believed on payroll meant that they were put onto the payroll with a new start date prior to the cutoff date. However, we are now aware that their definition of on payroll means that an RTI was received by HMRC with that data on or before the 19th of March. Now, the importance to this is it's supposedly, according to the government, going to capture over 20,000 people that have been left behind and fallen through the cracks, so to speak. However, that's not necessarily applicable for those that are paid monthly at the end of the month. Now, I know from running payroll and from speaking to my colleagues that generally month-end payrolls aren't processed quite so early in the month by the 19th, especially when you have a large quantity of them. And speaking to actual employers that run their own payroll, it's very rare that they'll process their payroll so far in advance before the pay date. So this means any new starters that are the 28th of February, etc., they might not have actually been processed on the February payroll, because with all good faith, they're going to pay the extra day or two in the March's pay run, which is a pretty standard process. So it means that they weren't captured until the March payroll, and lo and behold, it's been submitted after the 19th of March, because that's just how payrolls generally work. So this means those monthly employees are basically falling through the cracks again, and they can't be furloughed. It does open up some good news for those that are weekly or 2 weekly employees that have started at the beginning of March. And it also opens up for monthly payrolls that are processed and paid mid-month. So there is still some people that are now getting captured that weren't previously, but it's not the good news we originally thought it was when it was first announced on the 15th of April. Bear with me, I have quite a lot of notes for this slide, so just bear with, I just checked that I've caught them all. Okay, so the other things that they updated with the guidance on the 15th was the statutory sick pay and the interactions with the coronavirus job retention scheme. Previously, if anyone was self-isolating due to COVID-19, but they weren't actually sick, then they were on statutory sick pay, the first 2 weeks of which was reimbursed by HMRC. They've now announced that you can opt as an employer to furlough those workers instead of putting them on SSP, which is brilliant because it means as an employer that you're getting more money from the government, and as your employees, they're getting more money from the government as well, because we all know statutory sick pay is a lot lower than 80% of the majority of people's working salaries and wages as such. So it means that people will be able to live a little bit easier during that time. There is a catch to this. Furloughing periods is a minimum of 3 weeks. Now, someone who is self-isolating because they have the symptoms, or someone in their household has had the symptoms, is a self-isolation of a maximum of 2 weeks. So as an employer, you're effectively stopping that employee from coming in for 3 weeks instead of 2. So it is a business decision you need to make yourselves to whether that's appropriate for your workplace and appropriate for you as an employer. But having that option available to employers was a welcomed decision by the vast majority of people. It also has been extended for anyone that is shielding because they're a vulnerable person deemed by the National Public Health organisations, and anyone that's living in a home with someone who's shielding. So they now have the option for their employer to furlough them. Previously, that option wasn't available. It was no pay whatsoever, but they have now extended that furlough scheme to capture those people. Again, you've got to bear in mind that there's a 3-week minimum period for furloughing, but when it is for shielding, generally people are shielding for up to 12 weeks. So in that respect, you're covered. In terms of anyone on long-term sick pay, there is now an option to furlough those instead of keeping them on statutory sick pay, which in one way is a benefit to an employer, because if someone is off sick that's not COVID-19 related, there's still no statutory sick pay reclaim available to the employer. But under the CJRS scheme, there is the relief. You can claim that 80% back from the government. You need to be aware that there is, again, as always, a risk to this, and there's a side that we can't overly advise on because it's more HR advice and we're not in a position to give that advice. But what I can say is there are certain rules with long-term statutory sick pay, and it's to do with the number of weeks that you've been off sick, and you get so long before it gets disallowed, etc. So my advice to you is, if you're planning on taking anyone off long-term sick pay, is to consult an expert, a HR advice, or ACAS or someone like that, just so you've got your full information before you go ahead and just make that decision to kind of ease your company's cash flow and to help your employee. Now, you need to bear in mind, furloughing is still just an option to an employer. It's not enforceable. You don't have to force your employees. So if they request to go furloughed, you don't have to take that request and just grant it them. It's up to the business, not the actual individual employees. It is the business owner and the employer that makes that decision. There's an additional thing that's actually out there that's helping a lot of people in this time at the moment, and that is the government have extended furloughing to people that are struggling with caring responsibilities such as childcare or other caring situations. So an employee can go to their employer and explain that they're having childcare difficulties and therefore request to be furloughed. Now, in being processed as furloughed, the employer can make that choice, but they don't have to grant the employee that option. It's entirely up to the employer. Bear in mind, if your employee isn't furloughed, they might still turn around and say, well, I just can't work for you. It's just a decision you need to make for yourselves to whether that works. Finally, the last bit that was updated was a further clarification for volunteer work. We alluded in the last webinar that they wouldn't be able to volunteer for you as an employer, and that is still the case. However, the employer can find volunteer work for their employees for them to be able to go ahead and volunteer, but it cannot be for an associated organisation to the company, or to the employer, I should say, because you're not all limited companies. So the volunteering aspect is available. The employer can find that volunteer work as long as it's not associated to them themselves and it's not going to generate them any income in the long term. Finally, there's also been clarification that people can go and work for another employer during their period of furlough, providing it's allowable within their contract with their current employer. It won't affect holiday pay calculations. It's just purely that availability for people to go and work for other organisations who are screaming out for people to come and work for them, such as the supermarkets, because obviously they need as many hands on deck as possible. And to a certain extent, there's obviously people screaming out in the farming industry for help with fruit picking, etc. So there's no reason people can't go and work for those as long as their contracts allow them to do so. Just going to double check that I've gone through everything. Yes, brilliant. Right. So we've also had for directors written confirmation on the CJRS guidance on .gov.uk, and that is that directors can be furloughed, but they can only complete their statutory duties. Now, in the last webinar, I alluded to what that actually meant due to Companies Act 2006. And we kind of read into it and thought, you know what, this kind of leaves scope for people to be able to do some marketing. But actually, now reading the legislation that's been announced for CJRS, we don't think marketing really falls under statutory duties. It's a risk you guys can take for yourselves, but it's kind of deemed that marketing is revenue generating, so therefore it's not really applicable. So really, the statutory duties kind of cover your bookkeeping, so contacting suppliers, because you need to still pay them, processing your payroll, signing accounts, everything along those lines is within your statutory duties. That's not generating income, so it would be an allowable activity for you to do as a director. The other option you've got here is if you have got multiple directors or director company secretary, so multiple office holders overall, then there's nothing stopping you from keeping one director or office holder on the payroll and the rest being furloughed, because that one person could still be operating the business in terms of marketing, generating sales, etc. as they're going, whilst the others are furloughed to help with cash flow. There are risks with taking all your directors and furloughing them, and that's something you need to be aware of. Your competitors out there, they might not actually be furloughing anybody, so they're still actively promoting their business. And that could mean a customer who's coming to yourself and you can't help them because you're furloughed might go to your competitor and then stay with them after the coronavirus has disappeared. So it's really important that you outweigh the short-term benefits of furloughing yourself against the long-term risks of actually not having any work when corona comes, well, once coronavirus has passed. If you want to discuss that with your client relationship manager, please feel free to contact us. We can talk about that in a lot more detail. So what does the portal actually want from you? This list was supplied late last week. So for employers, they want the usual PAYE reference, the contact name and details, the business name, but they also want to know your self-assessment unique tax reference if you're a sole trader or partnership. And if you're a limited company, they either want the corporation tax UTR, so unique tax reference, or the company registration number. They also want to know the number of employees you're furloughing, and they'll want to know overall what your claim dates that you're making are for, between which dates. For an employee, they still want the name. The employee number is optional, but it will help your claim, I suspect, if you complete it. The national insurance number of your employees so they can tie it up on their records. And again, the employee's individual claim period starts and end dates. The reason why you're doing it for the employer and the employee is because actually, as an employer, you could have a group of employees that you furlough for for 3 weeks, and then another that you furlough for the following 3 weeks. And actually, you're making a claim for 6 weeks, but not 6 weeks for all the employees. So that's why there's that difference. And finally, they want to know the amount being claimed. Now, I went onto the portal this morning at 7 o'clock when it went live to find out everything that they needed to clarify that there's nothing extra added. And I can confirm that they want a breakdown of what's being claimed for each employee, for the gross earnings, the employer national insurance, and the employer pension contribution. So you have to break that down for each employee. So you need to bear that in mind. Those calculations need to be kept by yourself because HMRC have the ability to retrospectively check them. So I recommend you keep them for the standard amount of time you're meant to keep payroll records, which is 3 years and the current tax year. So you need to keep those records for quite some time. So those of you that joined me on the webinar a couple of weeks ago, I think it was now, You'll see, you might recognise this slide, and things haven't really changed. When it's a 4 months of furloughing, these figures are still exactly the same. I don't intend on running through them again. If anyone wants me to run through them off this webinar, just contact us and I can talk you through them in a bit more detail, or alternatively go and look at the webinar that I did a couple of weeks ago. It's on our website. But what is of interest is this, first of all, employers' national insurance. Now, there was debates to whether, as an employer, how the national insurance claim through the through CJRS versus the employment allowance and how it would interact. We didn't know at the time because there was nothing in legislation confirming one way or another. But the legislation now confirms that you cannot claim the CJRS element of the employer's national insurance if you're claiming your employment allowance as well. Now, the reason for this is you're not allowed to claim more than you're actually going to pay overall. Now, I appreciate some people might want to delay claiming their employment allowance until the coronavirus has passed. And then in theory, they're not actually paying anything more, that they're not claiming anything more than they've actually paid. However, when you make that claim later on in the year, be that June, July time, HMRC will retrospectively take that claim and apply it from April onwards. So at that point, you'll have claimed more than you'll have paid, and that's bordering fraud. So you can't do that. It's not really what the essence of this scheme and grant is really there for. So if you've got the capability to claim employment allowance, you cannot claim the employer national insurance element of the grant for any for anything that would normally be covered by the employment allowance. Now, obviously, we've got Marches that we can backdate. So if you've utilised all your employment allowance before March, you can still make that NI claim for March. But in April, because we start a new tax year, it refreshes itself. And it's increased from 3,000 to 4,000. So employers that previously might have had to pay a little bit towards the end of the year, they'll have nothing to pay necessarily now, with it upping to 4,000. Also, on a side note, this year you have to make that employment allowance claim again, which you historically will never have had to claim only once about 3 or 4 years ago, and it was rolled forward. They've changed how it's funded now. It's funded by state aid, so we have to make that claim now. So bear that in mind, that that claim has to be made again this month for employment allowance, and if you're making that claim, you cannot claim the furloughed employer NI element. And equally, as alluded to on this slide here, if your employee has opted out of their pension contribution, then you can't claim what would be the minimum employer national insurance element for that. Not national insurance, sorry, I retract that, the employer pension contribution amount. So just bear that in mind as well. So really, this is what everyone will be more interested in, if I'm honest, and that is what happens when you've been furloughed partway through a pay period. Now, the example I'm showing here is on a monthly basis. It's based, again, on someone's monthly average. For this particular person, it's going to be based on their salary for February, because they're a salaried employee and they were paid £2,000 a month. They were furloughed on the 11th of March. Their contract has been varied by their employer, so the employer doesn't have to top up the additional 20%. They only have to pay the 80%. And for this particular employer, for reasons we won't go into, the employment allowance isn't available. So they can reclaim that employer's national insurance. Now, the big thing about this national insurance and about the pension contributions is that the small amount before you have to pay any national insurance or pension contributions has to be prorated between the furloughed period and the pre-furlough period. So the figures you can see on here are based, because it was March's payroll, an effect that we're doing first, not April's, is they're based on the March's figures. Now, the national insurance kicks in at once an employee earns above £719 a month. Now, you would, for these particular calculations that you can see, the employer national insurance, you would take the 719 that you're allowed, divide it by 31 and times it by 10, and that gives you the element that you're allowed to have before national insurance kicks in. And then the remainder would then be charged at 13.8%. And equally the same for the post-furlough period, is you would take the amount that you're having, your free amount of 719 divided by 31 times by 21, and then 13.8%. You're more than welcome to have a go and see if you can come up with the same figures on my slide here. They have been double and triple checked, so they should come up with the same figures. If you're having any problems, give us a shout. It's not a straightforward calculation. Trust me, I've scratched my head over this several times, and I've had to make several alterations, even one alteration about 10 minutes before this presentation, because this isn't straightforward. It's not easy, and you've got to get your head around it. You've also got the fact that you've got different basic rates from March to April, because we're going to a new tax year, and you've got to combine all of that information together to get your actual first claim amount. It's not straightforward. It's doable, but we are recommending that you use a professional to work this out where you can, especially for those with varied staff payments. So again, the same for the employer pension. It's based on the qualified earnings amount. So for March 2020, it was based on £512 a month being the amount you could earn before pension contributions had to be made. Then above that is at 3%. Some of you won't be using the qualified earning method to work out the pension contributions. That's just unfortunate for yourselves that you're going to have to top it up for your employees unless you've made a variation in contract. And even then, I think it's probably difficult to vary that quite so easily. So you'll be able to reclaim the 3% above qualified earnings from HMRC, but you may find as an employer you're slightly out of pocket. And that's just unfortunate. Speak to us about that if you need further clarification. So we're nearly at the end, guys. Thank you for sticking with me. I appreciate there's a lot of calculations gone on there and lots of words. But now we'll just cover what you actually need to do to make a claim. First of all, you need a PAYE HMRC online login. Now, for those of you that we do the payroll for you, the vast majority of you we have agent authority for. There's very few that we don't. We'll try and get that again. I know we've historically tried to get it. We'll try again. But those of you that are doing your own payroll, first of all, you should have a login to be submitting your payroll data. But if for whatever reason somebody else does your payroll, but you want to make your own claims and you don't have an employer HMRC PAYE login, you can now apply for one. And HMRC have shortened the amount of time it takes to actually get that ready. It's instant. Whereas previously you've had to wait for an authorization code to come through the post. So HMRC are helping there as well. Secondly, you need to make sure you've done your calculations ready for the claim. Now, what I didn't allude to earlier is there is a HMRC calculator, but it's really, really important that you put the correct data into that calculator. What you'll have seen, if we go back from here, is that the dates and the pro rata calculations based on calendar days, not working days. Now, for anyone that's done payroll before, you're all going to kind of grimace to that, because I know I did. And it's because we're all used to having to work out prorated based on working days, not on calendar days. So it feels a bit alien. But what that means is if you're going to use HMRC's calculator, it's only going to be as accurate as the user putting the information in there. And if you're putting in working days and not calendar days for the month, it's going to give you the wrong calculation. And at that point, you're either going to be underclaiming or possibly overclaiming. And then that's going to cause you problems because that could technically borderline fraud, etc., etc. And HMRC are not going to take fraud kindly. So make sure you've done your calculations, use HMRC's calculator if needed, but make sure you have that ready for your claim, because as you're going through the portal, you cannot pause and save your claim. You have to go through to completion. That means for any of our clients that we're doing the calculation for you, that means you need to be checking your emails, because we'll be sending you what we're expecting the claim to be for you to authorize that you're happy for us to claim that amount. So keep an eye on your emails so that you can reply quickly so we can get these claims done as soon as possible. Finally, and what you need to do to claim, it changes for employers with more than 100 employees. For those of you with less than 100 employees, which will be the vast majority of the people on this webinar, it is a case that you have to put the claim for each individual employee manually. It's time consuming. This morning, when I was going through it, there was 25 different pages, and that was just for a single director. I expect when you add on extra employees, there's an additional page per employee. The actual claim format is straightforward, but if you get it wrong, it's not going to look good. So you want to make sure you're comfortable with what you're doing, and it is time consuming, and you need to make sure that you're prepared for that time consuming element. So finally, what can we actually do to help? First of all, we're a payroll bureau and we're payroll experts, so we can complete these calculations for you. You need to be aware it's not Jane and Amanda that will be doing these calculations. It will generally be myself or Vicky, some of the senior accountants is the word I'm looking for, because these calculations aren't straightforward. They need to have someone that's got that background in accounts, really, to be able to do them alongside payroll, and myself and Vicky have that knowledge, as do a couple of others actually, but for the time being it'll be myself and Vicky. Also, if you decide that you don't want us to do the calculations for you but you want us to review your calculations, we can of course do that for you. That will be a less costly procedure, because obviously all of this will have a charge associated to it. There's a lot of work involved, as you've already seen. We are minimising our costs. We're not profiteering from this, but we do need to make a reflection on the amount of time we're spending on working on this. So finally, if after all of this you've decided, you know what, payroll, I'm just done with it, I don't want to process my payroll anymore, we have the capacity to take on other people's payroll functionality if they need us to. So we're here to help. Any questions that you have in terms of costing we can take offline, but one thing we have got is a base cost now, so we have an idea of how much we're charging, and therefore we're going to be able to give you those quotes offline very promptly. So I'll now hand you back over to Laura, who will start going through the questions for me to answer.
Thanks, Edith. I was going to say, for anybody who does have a question as a result of today's webinar, feel free to send us a message in the question and answer section. I've actually had a few come through earlier on this morning. So if we start with those, the first question is from Sandra. If I'm furloughed, should I be paying suppliers or not? I.e., does that class as working?
So as I've alluded to, I feel that it falls under the director's duties to run their company, that they need to pay their suppliers. So yes, you can still pay your suppliers and be furloughed.
Thank you. Next to Paul, I think we've already had the answer to this one, but is there any update to the NI relief that employers are about to receive? Can it be delayed as the government are paying this? It seems there's no benefit to employers to use their allowance now.
Yeah, so that is the bit that I've alluded to about the employment allowance and how it interacts with CJRS. Now, I know it seems unfair, but what we need to bear in mind is that you're still getting that relief one way or another. You're either getting it through the employment allowance of up to $4,000 this tax year, or you're getting it through the coronavirus job retention scheme. I appreciate for those employers that over the year would pay more than $4,000, they'd want to utilise CJRS and then their employment allowance, but we have to respect that the support that's out there at the moment and everything that's being covered by the government is actually really quite generous, and therefore we cannot start taking, for lack of a better expression, the mick with this. We need to be utilising this effectively in the way it's designed to be used and not try and find loopholes with it.
Thank you. Questions from Steve. So the second question, as you've already mentioned, will be taken offline in terms of what will the cost to sort the scheme out for us be. I believe the plan is this afternoon to send emails to our current payroll clients with confirmation of that. Although given the time, it might fall into slightly early tomorrow maybe. Is there any movements on dividends or on whether dividends could be included in the scheme?
Dividends are categorically not included. It's a big frustration. I appreciate everyone's frustration in line with this. The government have their reasons for it, whether rightly or wrongly we agree with that. There's no scope for it, and I don't see that changing.
Question from Rob. There's a few questions, so I shall take them possibly one at a time. When is furlough pay from the government taking place?
Okay, so people can start making their claims now. from today. One thing I didn't allude to is how people that do their own payroll can claim. They need to go to the Coronavirus Job Retention Scheme guidance on HMRC's website, not HMRC's, .gov's website. Scroll down to the bottom and there's a green button saying claim now. If you click on that, you'll then be able to put your login details to make the claim. That claim should be paid if you claim today, tomorrow or Wednesday. It should be paid to you by the 30th. It's aiming to be up to 6 working days to pay it. There will be checks done by HMRC. There's going to be time delays with this first one because the portal may go down, HMRC systems may go down, but in an ideal world, it should take 6 working days.
Thank you. And then how will this be paid? Would it be possible for this money to go direct to the employees who have been furloughed?
Unfortunately not. It will go direct to the employer, and it's the employer's responsibility to then pay their staff. If they, in theory, unless they've had a variation in contract and the employees have agreed to delay their payment till the employer gets their funding, you're meant to have paid the employees already for Marches, and technically if you don't get the funding by the 30th of April, you're meant to pay them that as well, but I appreciate that's difficult for cash flow. So if you varied that contract and you can wait for that funding to come from HMRC to pay your staff, then that covers that. But yes, direct to the employer.
Lovely, thanks. And then I think, is there a minimum on the hours to be entitled to be furloughed? So I think that's if it's part-time workers.
No, there's no minimum. If someone works for you on average 1 hour a week, they can be furloughed on that 1 hour a week.
Thank you. And then final one from earlier today, Steve said we're struggling with the NI apportionment in the case where we are paying an employee more than 80% of their reference salary. Are you able to cast any light on this?
Yes, but I would recommend that I talk separately about that.
Yeah, no worries.
But effectively, you have to work out the 80% proportion of the furloughed amount to work out the national insurance. It's a manual payroll calculation that needs to be done. Hence why I think we need to have that conversation offline, because it's not straightforward.
Thank you. Okay, so to the questions that have come through during the webinar, Josephine said, thanks for your help. I'm wondering if we can furlough anyone if our company income hasn't been affected.
It depends if the work's available to them, really. The furlough scheme is designed for employers that would normally have to make their staff redundant due to effectively cash flow. So if you've got income coming in, it's not really applicable to furlough them. Whether you could furlough them due to childcare issues or whether they're self-isolating because they're either shielding or they've got the symptoms, that could be the exception to the rule. However, if you've got the income coming in and the work available and they wouldn't, under normal circumstances, you wouldn't make them redundant, then no, you can't furlough them.
That's cool, thank you. Okay, and then the last one we've currently got in from Anonymous. Okay, there's another one coming as well, but where do the owners of businesses run as sole traders or partnerships stand in terms of the owners working whilst using the government self-employed compensation scheme? Are they able to continue to generate estimates, for example, with future reference to when their businesses ultimately reopen in earnest to customers, or are they bound by the same restrictions as directors? That's slightly off-piste from today's webinar. But I'll throw it open to you. I've got a bit of an idea. If
so, correct me if I'm wrong, Laura.
Yep.
But my understanding is, because it is a completely separate scheme, and I don't know why it's a different rule, but self-employed can continue working whilst claiming on the self-employment scheme. Is that correct, Laura?
There has been nothing to say that you can't. I think the only thing that has currently been issued about the self-employment income support scheme is that you need to have been adversely affected, or your income needs to. There's nothing yet that, not that I've read anyway, that outlines how badly you need to have been affected. I know there are a lot of small sole trade businesses that, suppose that generally would do something where you need to be face to face with people that are currently doing things online, and there's been no guidance from HMRC in regards to whether that will affect their support from that scheme.
The infamous Martin Lewis, who is really campaigning about all of this side of things, his understanding is that self-employed can still work, But we all need to bear in mind, whilst we're listening to Martin Lewis, he is an exceptional person, but he isn't an accountant. He's not a payroll advisor. He just seems to know the people that he needs to know at HMRC to lobby everything. So he comes up with some wonderful ideas, but they don't actually work always in principle. So his understanding is you can, but as Laura said, I suspect there's caveats to that, and I expect updates on that to come out shortly. Now they've got the CJRS system in place.
I think there've been, in terms of sole trades, there have been some updates posted since we did our last webinar for those people, for kind of sole traders and partnerships, in terms of how you would work out your trading profit. But as I say, not that I've seen anyway. I don't think they've been focusing on this coronavirus job retention scheme, I think, as a priority. I would expect the next bit to come out would be in relation to the self-employment support scheme. Okay, so I think this is the final question, unless anybody else has got any more. Hi from Sandra. Can you run the HMRC online furlough each month rather than March and April together?
Now, it's a good question. It's one I'm not 100% certain on, but what I do know is that you can't make a claim more than 3 weeks within a 3-week period. You can only make one claim every 3 weeks. So my recommendation would be to do a backdated claim and do effectively a 2-month or a 6-week claim to begin with. They've worded it that you can backdate that claim. So the fact that they said you backdate it suggests to me that you need to do your March and April at the same time.
We've had one further question, who I think somebody's possibly missed the start or missed a bit of this. Can you clarify, can a director get another job completely separate and be furloughed?
Yes, they can, as long as it's not generating income for their limited company. They can go and get a job at a supermarket or somewhere completely different as an employee. There's no reason why they can't.
Lovely. So I think that is all the questions for today. Thank you everybody for attending. If anybody does have any more questions, please feel free to get in touch with us. So for clients, probably the best starting point is to message payroll @ and for non-clients, clientservices @ carthyaccountants.co.uk. And then for those clients who haven't already told us, if they would like us to do furloughing submissions, please let us know as soon as possible. As I say, I believe we will be getting in touch anyway with fee quotes this afternoon or tomorrow. So yes, thanks ever so much everyone.
Thank you.
Cheers.